Happy Monday, everybody. Ready for another big week? Today is May 20th, 2024, and this is your Monday market update. Last week was another huge week for the markets, and as records were set and the market seemed to melt up, there was some important eco data and eco news to keep things going, and let's dig into that, and more importantly, let's preview this coming week. It'll be a big one, too. Markets were quiet on Monday last week as there was little news to react to over the weekend. There was to be a week of catalysts, so markets were sort of looking ahead, a little quiet. Markets did open slightly higher on some China news about the government offering more debt to stimulate their growth over there, but markets rolled over after the New York Fed report on inflation expectations came up 3.3% versus the expected 3.0%. Markets churned around and ultimately finished a bit in the red ahead of the PPI, catalyst number one, due out on Tuesday. The Dow was down about 0.25%, the S&P down just under the flat line, and the NASDAQ managed about 0.25% to the positive. Pre-market was all the buzz on Tuesday as the meme stocks were back at it. That's GameStop and AMC, and that's really all I've got to say about that. I think I've been pretty clear over the years of my opinion on the pure gamification of the markets. It brings in bad habits. Overseas eco data was friendly, German CPI and sentiment, and then U.S. business optimism. Remember how I mentioned that was coming. It was actually not as bad as some feared. And again, you know how I feel about the not as bad as feared comments. PPI was out to confuse. The numbers were higher than expected, and that initially got people in the markets a bit freaked out. Then the revisions to the March data made things even out a bit. I will note that I am not sure why that is the case. I get it that the lower March and higher April even each other out, but if we lower March and April was higher, not to be repetitive, aren't we going back in the wrong direction? I get it if we lower March and April is in line with that, but that's not what happened. So markets were done with that news, off to parse the words from the Fed chair from a panel in Europe, and he was still in line, higher for longer, inflation stickiness, restrictive policy needed for longer, but nothing new, so nothing news. There was a Biden announcement on China tariffs, and that took the wind out of the market for a little bit, but AI to the rescue. Google announced that it was bringing AI into their search function. Thought that already happened, but it ignited one of those legs that this market stands on. Remember, AI enthusiasm. Markets felt like they were just still felt like they were chasing the returns. But going into the CPI print due on Wednesday, the Dow was up 1/3%, S&P up 0.5%, the NASDAQ was up 0.75%. And then there was Hump Day or CPI Day. CPI was out before the open on Wednesday, and CPI headline and core were both lower. Well, let's be clear, lower than expectations. This is a key point to remember. CPI is still up almost 3.5% year over year. So yes, the drag chute is slowing the progress, but for all those still concerned about the outcomes, not just the numbers, the prices are still 20% above where they were pre-COVID. And the move up has slowed, but it's still up. And just to put a cherry on top, wage growth has not kept up with those prices. But since the above expectation CPI was the reason we saw the 5% pullback in April, the below or at expectations print was enough to get things on the risk on side again. The other eco data that came out, especially the retail sales numbers, was a bit below expectation, flat from last month, and that is worrisome about growth. But remember, at this point, bad news is good news for rate cut expectations. And this news brought the July expectations in the futures pits here in Chicago for July from 25% chance to 35% chance for a cut, and September from 65% chance to 75% chance for a cut. Morgan Stanley is still at 3 cuts this year. As of this morning, Goldman is still at 2. I maintain that if you get one before the end of the year, you'll be lucky, and I do think it will be post-election also. Fed speak was not enough to get in the way of the train. Dow closed up over 0.75%, S&P up almost 1.25%, and the NASDAQ was up almost 1.5%. Thursday had stocks gap up to a new record highs on the open, as Walmart did not disappoint, and that's a good thing. They are a good gauge, not perfect, but the biggest grocer in the country, the largest employer in the U.S., 2.1 million people as of February of this year, and where we can get a lot of retail information, that and Amazon, right? So eco data was, again, bad news. That was good news for rate cuts. That was rate cut hopes, Jobless claims was on the other side of that, lower than expected. So the market is thinking higher for longer again? Not really, but Fed head talk was supportive of that, both Mester and Barkin. Stocks did come into some selling pressure, ended close to the low levels of the day. The Dow did pierce 40,000, but finished below that. So no Dow 40,000 hats, not Thursday at least. The Dow was down just under the flat line. S&P and NASDAQ both closed down about 0.25%. And then there was the Friday markets. Markets opened quietly, little changed. All of the main catalysts for the week were gone. Meme stocks are back at it still. And the one that I missed on Friday, but just caught it today, a bad choice of words, The Fed head Jerome Powell, as I told you last week, was to speak at the Georgetown Law School graduation. He tested positive for COVID, so scrubbed from the speech. Well, he did it via pre-recording. This is COVID number 2 for him, first time January of 2023. Fun fact, as we come to the close of earnings season, less companies spoke about inflation in their conference calls. Now, I don't have the stats on the use of the term AI yet, but from March to May 17th, FactSet scanned and came up with that 219 companies used the term inflation. That's above the 180 average for the past 10 years, but well below the high set in 2022. 410 companies did it in Q1 and 412 in Q2. Only 24 companies did mention it more than 10 times. So does it hold true? If they don't talk about it, it goes away? Well, we're going to see about that. By the end of the day, the Dow was up 1/3 closing over 40,000 for the first time. S&P up under 1/4%. The NASDAQ was down just less than 1/10%. The Dow did cinch a 5-week win streak for the week. The Dow was up almost 1.25%, and the S&P up 1.5%, and the NASDAQ was up over 2%. Let's look ahead to this week. It's going to be a look into a few. It's going to be a look into a few big names that like to come in and have later earnings reports. The biggest one is going to be Nvidia, that AI bellwether, and this will make or break things, in my opinion, in the short term. That's Wednesday. We'll also get Target, Lowe's, and some other retailers and some other techs. We will get Fed minutes, and although I do think it's important, it will be overshadowed by the Nvidia numbers. I think it's going to be parsed pretty closely. There's a lot to see. Remember, I think that you are seeing the Fed heads clearly talking higher for longer, and the market's figuring in cuts. So please note, one of the keys to the Fed in recent years is not surprising the markets. Again, like that inflation remark in the earnings reports, does the market think if they price it in long enough, it's going to happen? I remind you the broken watch is right twice a day, so we'll see. It may happen, we just don't know when, and we don't know how disappointed the markets will be or not be. As for Fed heads, they're out this week in force, not even at commencements, but at conferences. We'll see written text and panels. We'll get Bostic, Barr, Waller, Jefferson, Mester, Barker, Williams, Collins, and Goolsbee. Company data will be light, and eco data is going to be light. Company data from all the earnings is going to be here. The weekly jobless and continuing claims and PMIs, something we'll have to watch for the growth question, and the University of Michigan survey, consumer sentiment and inflation expectations. There you have it. The week that passed, the week ahead. Markets are in the green as we start the week. We'll see if that holds. Momentum should keep it moving until at least Nvidia. It is feeling toppy and overbought, so in the short term, we'll have to see. For now, keep in touch, call with questions, and come back on Friday for the planning video. Until then, have a great week.